All right, good morning, everybody. Happy FOMC day. Should be a fun day. We will be streaming, obviously, our normal stream in the morning. We'll see you guys at 2 p.m. as well. We'll have that FOMC and the press conference stream later in the day. But for now, let's take a look at our trade plan here. So last night we said holding above 482 or below 440. That is still the same trade plan for today, because the pre-market is just completely chopping inside of that value of yesterday. So if we stay above the value high, then obviously we'd look for higher value. If it stays below the value low, we'd look for lower value. But if it stays in between, we just look for rotations. And I would say you might want to have a slight bullish bias today because of that weekly open. We're kind of being pulled back into it. You can see that magnet holding us back in every time we try to push away. So keep an eye on that around 490. So above the value high, we're looking for 500 and 533. Below the value low, 416 and 392. Same exact story. By the way, it's a D-shaped profile. I should have said that on ES, but same thing on NASDAQ here. D-shaped profile. It's a bit of a wide one, so the value is a bit wider. We are trading relatively inside of yesterday's value on NASDAQ. Little bit of a breakout on the high and the low, both pulling back to that POC, to that mean, having that mean reversion. If it stays above that 65, look for 382 and 501. That is the weekly open. If it stays below 822, look for 622 and then 344 for a potential breakdown. If it tries to get too one directional before the FOMC, before 2 p.m., I would be a little bit careful trusting that as a dominant move. It might be a trap and then reverse back to the POC or just the value, right? Okay, one last thing we want to take a look at is the probabilities for the Fed meeting today. Yeah, this is not good. So we have a Fed meeting in a couple of hours, a few hours, and we are still like 60-40 on what the Fed is going to do here. Normally, the day of, this is like 90% or 80% on one side. They're pretty much decided by the day of. So today being nearly a 60-40, you need to be very careful in your trading because the market doesn't really know what it's going to do. So we could be seeing a lot of volatility before the meeting and obviously during the meeting. That is one of the worst percentages I think I've seen in a very long time on the actual FOMC day. I think the lowest we've seen recently is like 80% on FOMC day. So 65%, definitely not the best. A lot of sell pressure on the open here, continuing that delta from the open, or sorry, from the pre-market. You lost VWAP a little over an hour ago. Yeah, eBay, I was saying you can use both levels. It's really hard to decide which one is the true magnet. So realistically, you can use both levels. I've marked out the actual weekly open, but you can also use the gap level as well. That's the problem with all the chop here. And you can see exactly what's happening. You have the weekly open pulling you, and then you have the close of Friday pulling you. So you're getting a ton of chop in between those levels. So yes, you can use both levels. And if you guys want, I can just mark out that one as well, and you can just kind of see what we're doing between both of them. It's not technically the weekly open, but it's still that same mentality of like we should not be moving too far away from where our value was last week. Basically, the entire point of the magnet strategy is leading up to the FOMC or even during the FOMC week. You don't want it making like a big one directional move and finding new value. You want it to stay around that value that it had last week. So whether that's Friday's close or Sunday's open, those two levels are normally the exact same level. But recently we've been seeing a lot of like Iran stuff over the weekend, a lot of headlines coming out in Asia. So we have a lot of gaps on Sunday. So it's a bit harder to determine what exactly that value is that we should be sticking to from the prior week. Good morning, everybody. Good morning, Future, Scott, Luis. Good morning, Hugo, Roman, Scott, Morris, Roma. Good morning, Joseph. Good morning, Julio, Greg, Wilford, Lulu, Orion, Larry, Lubmir, Steven. Good morning, Sebastian. Good morning, Wally. Good morning, Scott, Flory, eBay, Fernando, ATF. Good morning, Ray. Good morning, Chuck. Appreciate you guys being here. Very similar pattern we keep seeing every morning where the strong pressure out of the open is typically reversed. So we are seeing that buy pressure coming here, trying to reverse that initial move. Taking a quick look at the macro stuff. You have that VWAP from the low, from the gap on oil. We are bouncing off that VWAP beautifully, so still going back into that upper value. The correlation is still bearish on oil. Dollar and yields are still pretty flat, but they are still in that uptrend. They're still pushing higher. On ES and NASDAQ, ES not so bad, still in that flat distribution. NASDAQ pretty bad. We have lost our VWAP from the bottom. So if they don't quickly reclaim that later this week, that is pretty bearish. Keep it on VWAP if it does continue to bounce here. These 30-minute highs are being protected for now. As far as the calendar goes, we don't really have anything in the morning. We just have that FOMC at 2 p.m. Oh, sorry, guys. I forgot to post the trade plan on YouTube. Let me do that now. I was forgetting something. Hey, D said, is there a difference between ESU 6 and ES on Addis? So the U6 is the literal contract, like it's the contract that we are currently on. If it just says ES, it might be the continuous contract. So your prices should be the same, but it's not on like the actual contract. It's using like the continuous. We're actually going to be rolling over fairly soon. It's in September. And that will go to the Z contract. So right now we are on the U contract. It rolls over every quarter. Some futures contracts are monthly, some are quarterly. Usually the rule of thumb is like if it's a commodity, it's monthly. If it's an equity, it's quarterly. That's usually the case. Oh, today is also the first day for those single stock futures, so we'll see some headlines on those, see how many, how much volume they're getting. Good morning, Joan. Good morning, Joshua. You said, do I even need to trade today? Like I always say with risk, there's going to be a lot of risk, but with risk comes opportunity, right? So it's up to you, really. If you like trading those volatile, kind of risky days, today will probably be one of those days. But it's going to be pretty sloppy probably before the FOMC. So if you guys do want to trade, just be a little careful before 2 p.m. Don't fall in love with your positions and just take it slow. It's usually pretty choppy before the FOMC, and today in particular, they are not decided on what we're going to do on the FOMC, so it could be even more choppy, right? Volume is non-existent on those new futures contracts. Well, have they actually like fully started trading yet? Or are they like slowly rolling out? I think a big thing with those contracts is they are going to be appealing to a lot of retail traders. And it's going to take a lot of retail traders time to realize, hey, I could just trade this instead of options. Yeah, Rocket, it does kind of seem like it's an outdated system, the whole like rollover thing. Maybe eventually they'll probably get rid of them, but we'll see. Good morning, Olive. Modern said, I heard they had some issues with their market maker liquidity providers, so the rollout was delayed a bit. Gotcha, that makes sense. For the weekly open, I normally use Sunday open, but for this time, because there is such a large gap, you can use Sunday open or Friday close. Which Friday close is obviously technically not a weekly open, it's a weekly close, but same idea. It's like the magnet. A quick reminder, guys, it is the last week of the month, so if you guys want to go ahead and start sending over your receipts for your raffle tickets, there is my email. Make sure to have those sent over before Saturday. So if you used code BREW anytime during July, and that goes for the end of the month as well, if you buy them on the very last day, just go ahead and make sure to submit them. Yeah, any accounts, doesn't matter if they were legacy, doesn't matter if they were the normal accounts, the trailing, the drawdown, the daily drawdown, whatever. As long as they're not 25Ks. Those are the only ones I exclude, because I do not recommend you guys trade the 25Ks, especially in this market. You will just get destroyed. They're very hard to trade with that size. But yeah, anything other than a 25K, if you use code BREW, just go ahead and send it to that email. If you can put them all in one email, that is the easiest way to do it. And then put raffle in the subject line. And I will send you an email back saying I received it, so you guys know that I saw it. And I will get you added. Hey, Olive, you said I have a question for you. Do you have any videos on how to identify a trend change? That's honestly just like all of my videos. Like that's basically the main point in my just like my strategy overall. Like my entire strategy is identifying shifts in momentum, right? Shifts in the trend. The whole idea behind the Momo, behind the OTS pivots in the trail, the bear flags in the VWAP, the absorption and exhaustion. I mean, like almost everything I teach is kind of that, right? So I don't have like a specific video on it. It's just little bits of like every technique that I teach. Because that quite literally is my entire strategy. Identifying shifts in momentum is my strategy. That is what I focus on. Yeah, D, as you see on my stream pretty much every day, I will go over basically all of the profiles, except for the weekly profile. I don't go over the weekly every day. I typically do it like once a week, maybe. But the blue one is the overnight. The gray white one is the full session. And then like this one is the cash profile. So I think there is value in using all of them. There is no like right or wrong. And then I also have the weekly over here, which like I said, we talk about this typically like once a week. I should go over this more. I'll try to go over this a bit more. We'll take a look at it every now and then. But the weekly profile is usually for like bigger trades. Or I should say like longer trades, not bigger. not so much for the scalping and day trading. Right now, the biggest thing to look at for the weekly profile is we are constantly failing the VWAP of last week. So we're still pretty bearish. We're obviously losing value. Our VWAPs are obviously coming down, and we are rejecting those VWAPs. The week before, VWAP close, tried to push above it, rejected it very hard. Same thing here, weekly close, tried to push above it, rejected it again. The same exact thing I used to teach you guys on the monthly time frame, which I don't teach as much right now because we're not focusing on stocks. We're not focusing on individual names. I don't even think I have that on my chart anymore. Yeah, I think I took it off. But what I used to have is, I shouldn't have taken it off. That actually is unfortunate. I used to have the monthly VWAPs. I'll put that back on later today. I think I accidentally removed that when I was making a video. Okay, keep it on the delta here because we are pushing low of day, but the delta is pretty weak. The delta is pretty good on NASDAQ, not very good on ES. Here's that overnight low at 38. We'll see if we can stay below that. So keep it on this 440. Below that, you have the low of day of yesterday, which is 420 to 16. Here's that VWAP that I was talking about. So these are our monthly VWAP closes. So you can see how we're getting very flat on those monthly VWAP closes, and we are starting to lose it, which is really bad. When you start losing these monthly VWAPs, you can tell we get into a decent little downtrend. Yeah, dude, no problem. Yeah, Olive, it's just a lot of stuff. I understand you guys don't have infinite hours to watch all my videos all the time. It's so much stuff to keep track of and to learn. I get it. It's just like learning anything else. You just got to take it kind of piece by piece. Don't over exhaust yourself, right? They need to find some more value down here. This is a really strong push, so it doesn't really matter right now. But if they start fighting back against this, it can be exhausted very quickly. They do need to find a node down here. They are getting the delta. So like I said, when you were pushing low a day, you needed to see that delta come in. They are getting it. But they do need to find some value. Hey D, so how does Apex Trader work? I currently trade CFDs. Yeah, so CFDs are they're not traded in the US. They're not even allowed in the US for the most part. That's mostly a European thing. But for the most part, CFDs are they're kind of like another form of like futures. You're basically trading a derivative. You're trading another form of a futures contract, pretty much. It's just like a worse form, usually. Um, but the way that prop firms work, like Apex, is think about it like simulator trading. You're buying an account that is like a simulator account, and then if you can pass their goals, they'll have like a set profit goal, and they'll have like a set drawdown, meaning if you lose X amount of money, then you lose the account. So if you pass their goals before obviously hitting the negative version of it, then you get a better simulator account. It's still a simulator account, but it's actually real money to you. So if you make money in the paid accounts, you can withdraw that money as if it was real money. But the benefit is it's not technically real money on the downside. So if you get to a paid account and then you lose the account immediately, like let's say you lose $2,000 in the account, you don't owe them $2,000. You didn't actually lose $2,000. You just lose the account. And then you have to start over from the simulator funding, the funding account, right? So you have like the first account, you pass the goal, then you get to a paid account, and then on the paid account, you can withdraw that money that you earn as if it was real money. But you still have the downside protection from the prop account. The only money that you would like quote unquote lose is if you make a bunch of money in the account and you don't withdraw it and then you lose it. That was money that you could have physically taken out into your bank account and then you lost it. So that is money that you're kind of losing. But you're never going to like owe the prop firm extra money. It's just money that you're using to buy the account or money that you've earned as profits. So they have a lot of downside protection compared to just using your own money to trade a futures account, right? So that's the big benefit. That's why people choose to use them. Hopefully that made sense. Basically, just think about it as like a better version of a simulator account. It feels like it's real money because when you get to a paid account, it kind of is real money. But you're still in that protected, like, simulator environment. Good morning, Michael. Yes, this is Addis. Yep. I don't physically do a lot of trading on Addis, Hugo. I use it mostly for charting. Most of my trading is on Tradeovate. Okay, keep an eye on our target coming up at 16 very quickly. The nasty drop so far. Yes, I do have a video on the 8 and 24. I think if you type in 8 and 24 on my channel, it should come up. I don't remember if that's in the title. But I believe it's called like responsive and aggressive. So if you type in like responsive, aggressive, 8, 24, like those keywords, it should bring that video up. And it talks about how I use the EMAs to like view where the aggressive traders are. Like right now, it's very aggressive. If it was trading more around the 24, it'd be more passive. Good morning, Faraj. Good morning, Tamer. Yes, D. They have all prop firms have rules to protect themselves, obviously, and to obviously make it a business model so they can make money. Is that a bull div there? Not really. Kind of a long-winded bull div. Yeah, not really a bull div. But yeah, they have rules like that, like consistency rules and whatnot. So you can't just like make $10,000 in one trade, but then you only make like $100 in your other trades. You need to be consistent. Basically, if you're just trading normally and you're not doing anything weird, you're not going to run into most of the prop firms' rules. This goes for like most of the big prop firms. You're not going to run into their rules that much if you're just doing normal trading. You're just keeping your size relatively the same. You're not trading like big news announcements or earnings and stuff like that. Like trading the FOMC today is a good example. If you make a shit ton of money on FOMC today, but then you only make like $100 every other day, that's not good. So just trade normally, really. Just don't do anything crazy. Don't treat it like a gambling account. And you won't run into most of their rules. Might turn into a little bit of a capital B day if they establish a major node down here. We'll keep an eye on that. Which one rule slants the odds most in the favor of the prop firm making money versus you making money? Probably the consistency rule. If I had to, I mean, that's really the only big rule left if you're talking about Apex. Apex, most of the rules are gone now. They've gotten rid of a lot of the rules. The consistency rule protects them from like really ridiculous days, like somebody just taking a gamble trade on the FOMC and then making $10,000, right? They're not being consistent, they're just gambling with somebody else's money. If you want to gamble on the FOMC, just do it on your own account. That's basically what the prop firm is telling you, right? The prop firm doesn't want to take that massive loss because you want to gamble on the FOMC. Black, you can just watch my order flow playlist. That will help you a lot on the order flow side. You can watch my order flow video in the Apex series as well. That should help. Hugo, just watch my my order flow video in the Apex series. At the end of that video, I go over my settings. And you can copy all my settings. I actually put out another video after that. I forget what it's called. That is literally just for my settings. If you just type in Addis. Here it is. It's actually easy to find. This is my last video. There you go. I've never used it black. I only use Addis. Keep an eye on the 24 EMA here. We're bouncing right before our target. Our target is 16, which is because, let me pull it up here. It's these lows right here. So we're bouncing a little bit early. Watch this rebound here. If the rebound stays below 40, it's still pretty bearish. You just have to check their website, Black. They've got a couple of plans. I don't remember the cost off the top of my head. Hugo, I don't think they have their, like, official MacBook version, but they have, like, a beta version, I believe. Right now, we have a little bit of a rebound into the 24. If that rebound stays below that daily VWAP, it is still pretty bearish. Hey, Jazz, I appreciate that, man. Thank you for joining the membership on YouTube. Welcome back. Good morning. Thank you for supporting the channel, man. Good morning, Sam. Good morning, Jade. A reminder, guys, I will be streaming this afternoon, so we'll have the FOMC stream at 2 p.m. So we're going to do our normal morning stream, take a little break, and then we'll come back for the FOMC. It is, in fact, turning into a capital B, like I said earlier. So we built a strong node here. It's bouncing off that node, just like a capital B, and fighting over the middle, which is exactly what I said about the rebound. So we're rebounding back into the middle, and if they protect that middle, they are still bearish. So anything from like 40 to 45. They need to protect. Good morning, Dennis. Good morning, Ringo. No, Black, I don't do the quick in and out scalping. I'm more so looking for the much wider trades. I try to take larger trades that I can only take like 2 to 3 a day instead of taking like 20 a day. Yes, Scott, you could call this a trap. You had a short-term increase in momentum, but it ran into the trail. This is why I always tell you guys to combine these two. When it has that little spike into the trail, you can almost guarantee that if it wicks that or if it shows like weakness on that trail, it's probably going to turn into a trap. So then you had that wick, and then it turned into a trap. Nearly the same thing that happened back here as well. You had one on the 5-minute on the pre-market. There's also a little one right there. There's a couple of traps throughout the day. Buyers trying to get strong, but then they just get rejected. But yeah, that's the exact rebound we were just talking about. You rebounded back into the middle of the capital B. They protected the middle beautifully. And now we are back down. So that was a combination of like everything we talk about. That was a combination of the indicators, the Momo and OTS showing you a trap, the capital B middle showing you a rebound, even the 24 showing you a rebound, and then here is the rebound on the volume profile. We lost the value low, rebounded back into it, and then sold. Want to mark? Yeah, I don't do that style of trading. I don't do the like 2-minute trades, 3-minute trades. My trades on average are like 30 to 45 minutes. Usually 1 or 2 30-minute candles is kind of how I look at it. Because we're normally basing our trades off like what the 30-minute is doing. So then if we're correct, the next like couple of 30-minute candles will do what we want. Sometimes more than that. Like if it's like a massive runner, it could go even longer, right? A couple more 30-minute candles, but usually it's 1 or 2 30-minute candles. No, I don't know any of the influencers or like other big traders. I'm not that style of trader. I don't really care about any of that stuff. I don't care about what other people are doing. I'm just doing my thing, and if you guys want to watch, you guys want to watch. I'm not into the whole influencer side and tracking what these other channels or other traders are doing. Not really my vibe. 30-minute pivot here at 421. And that is the last pivot for quite a while. 81. Little support down there as well. There's the daily trail flip. So daily trail flipping red has not locked in, obviously. We'll have to see what the FOMC does. But not a great sign there. We had a flip earlier. It got saved by the rollover. The rollover pushed us back up. There is a little bit of a bull div here on this low. Delta and momentum. They are mainly course sellers, yeah. Yeah, that's why I try to stay out of that whole, like, just that era of the trading world of all the influencers doing all that stuff. I'm not trying to be an influencer. Not for me. That bull div is instantly invalidated. There is no bull div here anymore. Momentum's still going down. That div has been invalidated both delta-wise and on momentum. So no divergence on momentum, and delta is nuking, so they repaired it on both. There are no secrets. Yeah, exactly. Like, people always like sell multi-$1,000 courses and say they have the secret to trading, and that's not really the case. Like, pretty much everything in trading is already known. It's already taught. It's already in textbook. It's already in regular books, right? There's not a whole lot of like, oh, I'm the only person that knows this in trading. It's all hard work. Yeah, exactly. Hard work, accountability, realizing what you're doing wrong. By the way, that target is hit. That target has been hit. So it didn't hit it on the first time, hit it on the rebound. So rebound, then it hit the target. Next level is 92. Keep it on the 30-minute close. A little early to say that, but it will have single prints going back to 20. Yeah, the funny thing about trading is it seems like it's really hard to learn all this fancy stuff like the indicators and the order flow and volume profile. All that's kind of the easy part. Like, learning the technical stuff is really the easy part. The hard part is like the physical and emotional battle with yourself, right? Having the accountability to understand that you're the one that's causing the problems and you're making the mistakes, and you need to figure out ways to fix those mistakes, right? Have the discipline to follow a plan. And basically no course is going to teach you that. That's all just screen time and working on it. Liquidity still very bad. Trading less than like 20 contracts per tick. Still getting a ton of level 2 orders on the tape. We'll see if they can hold on to this 16 level here. Good morning, Bella. He said it's that instant gratification or expectation of the trading plan working. Yeah, exactly. Well, it just goes back to what I always talk about with trading plans. It's like having a plan for both sides, right? And not locking yourself in like, this is exactly what I think the market's going to do today. And then it doesn't do that, and you're just like pissed off, and you're tilting and trading improperly because you didn't have a plan for it. It's like when you look at Monte Carlo simulations, right? It has all these random lines going in all these different directions. That's kind of what your brain is doing. You're just thinking of like all the different possibilities of what could happen. Doing a good job building a node down here. Right now we are just rotating back and forth. It's not obviously one-sided. They're trying to stay relatively close to that 20 level, which will make it so they do not have single prints in about 10 minutes when that candle closes. Yeah, exactly, modern. That's what I always talk about on stream is it's more so about protecting your capital and protecting yourself than constantly looking for like, oh, how much money can I make in this trade and how much of a runner could I have? Like you're more so if you focus heavily on the downside and fixing the downside, the upside is so much easier, right? People focus way too much on the upside and their losses just completely destroy them. It's a big thing that we talk about very early on in the tutoring. If I'm tutoring a new person, we talk about like going over their calendar and their journal and seeing like, okay, here you have one red day that's wiping out 5 green days. That's obviously a massive problem. Like a lot of the times they're not even bad traders. They are consistent. Their win rate's pretty good. Everything is good. They just have like 1 or 2 red days that just completely wipe them out. And they could literally change nothing else and just focus on not having those massive red days, not going on tilt, having a daily max loss, having a daily drawdown, or whatever it is, right? And they would immediately become a profitable trader, right? Now, that's not everybody, but in those particular people, when they have green, 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 big red, green, 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 big red, right? That's the problem. They just got to focus on fixing the red days, not the green days. Which is why I constantly make that argument that you guys don't like. That I think the prop firms, the rules with the daily drawdowns and the trailing drawdowns, yes, they might be a little aggressive, but they train you to stop doing that shit. Those are rules you should have for yourself if you were trading your own account anyway. So people hate those rules, but to be honest, those rules are probably the best at training them for exactly what I'm talking about. Fixing that drawdown problem, fixing that big red day problem. And the people who realize that and they don't bitch about it, they become better traders, right? They're sitting exactly where they have to sit to not have single prints. So they really want to stay above this like 18 level. TradeAid has a way to set daily loss limits. Yeah, pretty much every major futures broker, you can set a daily loss, which most people should be doing for sure. Good morning, Bob. Do I trade on prop or have my main account? It's mostly on my main account, but I have prop accounts as well. Yeah, it's just the type of market we're in. We're in the market where I mean, look at what we're looking at right now. This is like damn near a 20-point bounce, right? It's a 10-point bounce, but you get what I mean. These bounces are very aggressive. So if you're trailing anything below 10 points, you are getting bounced out on every regular move. Like, not even like a crazy move, just a regular bounce is trailing you out. And that's just the type of market we're in. We're in the market where if you want to be getting out of your trade, you need to be taking profit on those aggressive moves in your favor. If you keep trailing, you are going to get trailed out pretty easily, which is not a bad thing. It's just you need to understand that. If you're okay with that, that is perfectly fine. But if you're like ready to get out of your trade, that doesn't mean bringing your stop down. That means getting out on the aggressiveness. We don't have single prints right now. If we have them in a few minutes, I'll show you. But we don't have them right now. This is a 5 minutes. So if you're talking about this trail, this is the OTS trail. It's like an EMA, but it's not coded as an EMA. Like, that's not an actual EMA. Very similar. It's like a volatility-based EMA. We still have a delta problem here. The buyers are winning the delta battle pretty easily. Good morning, Tom. Okay, at this point, we very likely will have single prints going back to 419. They repaired that too early. And here is our next target. Our next target is at 92. I will have to extend our trade plan. It is already complete. Extended targets are 59 and 37. We still have our target at 44 on NASDAQ. Oh, I was muted, damn it. What I was saying was, I was answering your question here about, you said what really helped you was to stop catching knives. And I was saying that most of the time when people are catching knives or trying to sell tops, they are doing it on hopes and dreams, hopes and prayers, right? There isn't actually a trading strategy there. They don't have a setup. They don't have a reason to be taking that trade. They're just like, oh, it's very aggressive to the downside. It must be extended. Let me buy it here. It goes back to what I say about RSI with the overbought and oversold. And even the Momo, if you look at the Momo, we have the purple shading and the gold shading, which is very similar to the overbought and oversold. And what I always remind people is it has to be very aggressive in that direction for it to be overbought or oversold, right? It doesn't mean that it has to come back. A good example is single prints, right? We're about to have some single prints here in 1 minute. When you're forming single prints, it has to be very aggressive in that direction. Yes, there is a lot of reversals that come back and fill in the single prints. And yes, when you're trying to knife catch or sell tops, it could be very extended and it should come back, right? But you need to have a reason. You need to have a setup there that is causing you to look for that knife catch, that's causing it to go back to where it should be. Not just like I said, hopes and prayers, right? As long as you have a setup like a bull div, a sweep, exhaustion, you're targeting the single prints being filled in, like you have a general idea. You know where your target is, you know where your stop is, you know what the setup is. That's not exactly knife catching. If you're just like, oh wow, this went down a lot, let me press the buy button, you're going to get run over. It's oversold for a reason. And there are the single prints. They're highlighted yellow. It's because we moved so aggressively in that one direction. It is giving like a value gap. So now there is a value gap to the upside. When I'm doing my trade reviews and the tutoring, I always ask people to like take screenshots, right? And I always ask them to have like the EMAs or just like something to go off of, like on their screenshots. And if they have like the fast EMA, like an 8 EMA or just somewhere around the 8, you can normally see with their entries how aggressive and how extended their entries are. A great example is like a couple of these pullbacks down here. Like we have this pullback here. We have this pullback here. This one here. Do you see how extended they are off the 8 EMA? And then do you see, like, if you just zoom out and like look back, do you see how the 8 EMA always acts like a magnet? And it pulls price back into it. It's the teal line, by the way. Like right here, you see how it's so extended and it pulls back into it? So if you're looking for like true extensions, like when price is actually extended and it should come back, that's one of the big things that I teach is when you're so far off of the fastest moving average that you have, then it's probably a little extended. You probably don't want to be a seller down here when it's so far extended off the 8 EMA. It doesn't mean you have to be a buyer, but it means that you probably shouldn't be a seller. If you want to be a seller, wait patiently for the magnet of the 8 EMA or the magnet of whatever trailing system you're using, a prior node, prior candles highs, or whatever, right? Just whatever trailing system you're using. Just be patient for that pullback. D, all of my teaching is for ES and NASDAQ. They work hand in hand. Single prints being filled in, go to 19. You're quite literally seeing exactly what I just said happening in real time. We were talking about having a reason to look for that extension, right? Not just randomly knife catching. Look at what you see on the Momo, look at what you see on the Delta. You have a lower low on price, a higher low on Delta. You have a lower low on price and a higher low on momentum. So you have a bull div on both instances, momentum and Delta, and there are the single prints being filled in. They're not just being filled in randomly. Black, my EMAs are the 80 EMA, the teal one, and the 24 on the orange one. If you're asking specifically what an EMA is, in the nicest way possible, this stream is going to blow your brain. Like, your brain's going to explode if you don't know what an EMA is. If you're watching my stream, you need to take it step by step and learn the basic stuff and the little stuff before jumping into the order flow and the volume profile and stuff like that. In a great series that I made for people that are still learning the basic stuff is the Becoming an Apex Trader series. That series does exactly what I talk about. You're learning step by step. You're learning the more basic stuff, a little bit more advanced, a little bit more advanced, and then you're learning like the deeper stuff. But yeah, if you guys are coming in here and you're asking like what a futures contract is, or like what is VWAP, what is an EMA, like all that stuff, your head is going to explode on my channel. Or on my stream, I should say. This is a lot of stuff that is a bit more advanced. I'd recommend starting with the Becoming an Apex Trader series and then also watching my shorts. My shorts will get you a little tidbits of information here and there. That's not even order flow, Black. The EMAs are like the most basic form of trading. That's just price action. Order flow is years down the line from an EMA standpoint. The typical path of a trader is usually like naked price action, like learning candlesticks. Then you're learning like basic price action indicators like EMAs, VWAPs, maybe throwing on like RSI, MACD, like the very basic momentum style indicators. Bollinger Bands, stuff like that, volume. Then it gets more advanced. Then you start getting into more stuff, kind of like my Momo, my OTS, like finding pivot levels and volatility-based indicators. Then you start diving into more of the volume analysis, like the nodes and the sweeps and all that stuff. Sweeps go into volume because of like the exhaustion, absorption, that sort of thing. So more of like the volume, the deeper volume analysis. Then you go into more of like the deeper order analysis, like the order flow, the tapes, the delta nodes, the block trades, all that stuff. But you can't skip to order flow without understanding candlesticks, without understanding EMAs and VWAP. You're just not going to learn it. It's just not possible. I can agree. My brain imploded when I first found the channel. Yeah. Well, you guys have to understand my channel is like 10 years in the making, so you're jumping into a channel that has like 10 years worth of content, going from teaching the basic stuff to teaching what I'm teaching nowadays. That bull div is still in play, by the way. You have hit your bull div target, so we always target the trail. Anytime there's a bull div or a bear div, you always target the trail, because that is like the scalping move. But if the scalping move turns into like an actual day trade, like a bigger trade, it will break that trail. It's not breaking the trail, so you're still kind of in the scalping move right now. And the scalping move is close to death. It's about to die. The trend is beautiful. It's a very kind of zigzag trend. Like you're getting a lot of bounces, but they're protecting the 24. They're protecting the trail, the highs. Very stable. You're not getting like those massive traps. Sellers are very strong. They are protecting the single prints, not allowing them to fill in entirely. That tells you that that initial move down is quite strong. Black, I'm not that type of channel, man. If you're looking for that type of channel to like tell you like this is easy and day trading is awesome and you can quit your job and live a happy life and make millions of dollars, that's not me. You're not going to get that from this channel. Obviously, you can be successful. You can be successful in anything in life if you try hard enough, right? I know it's very cringe to say, but it is for the most part true. There are a percentage of traders that obviously can make it and they can do this for a living. But I'm not going to tell you guys that that's going to be every person in here. Sadly, it'll probably be like a dozen of you guys in here, right? If we're going off the stats. All right, next target is 59. We do have some room to fall here. But yeah, it goes back to what I always talk about on stream with that topic, is I try to focus on you guys that are losing money and help you guys lose less money, right? Because that's the vast majority of people in here. The people that are losing money and they need to protect their capital, protect themselves. So I try to focus on helping you guys manage your risk, manage your drawdown. I'm not trying to focus on making all you guys millionaires, right? That would be me focusing on like 2 people. Me focusing on like maybe 5 people, right? But if I focus on trying to help you guys improve your red days and protect yourself on your red days, that's me focusing on 99% of you, right? Yeah, it's your toe. That's the best way to put it. It's like people always look at trading and like kind of like a casino, like gambling. Like I have to be either max loss or max win. They don't look at it as like you could make talking in American standards, you could make $50,000, right? Like what's the median income right now? The median income's like 50,000, 60,000, whatever it is, 70. You could make the median income and that would be successful. You could make half of the median income and it could be like your side job and that would be successful. Right? You could make 10,000, 20,000 a year and that's just your little side gig. That's good. That's awesome. You're making 50 to 70,000, making the median income, whatever it is. That's awesome, right? You don't have to make 100, 200, 300, a million. Yeah, the old school math was, which I don't like talking about too much because people they over exaggerate it. The old school math is $100 a day is 25,000 a year for trading. And you can multiply that obviously, but that's where people go wrong. So that means if you average $100 a day, which doesn't seem like a lot in this market, right? That seems achievable. If you average $100 a day, that's 25,000 a year. So 200 is 50,000, so on and so forth. So the reason I like using that number every now and then is it helps you understand the big picture of like you don't have to make $1,000 in one day. If you're playing the long game and you're looking at it expanded over an entire year, you just have to average $100 a day, right? Maybe $200 a day. And that's on average. That means you could have big days, you could have red days, whatever. Like I said, $100 a day, that's a good side gig in the US, $25K a year. $200 a day, that's damn near a full-time job for most people. $300 a day, that's a really good job, and then so on and so forth, right? Yeah, look at it on a bigger picture. Don't think about your daily. Think about your weekly, your monthly, your quarterly, your yearly, right? This is a market profile, Jay. You'd have to watch my how to trade market profile video. Yeah, Anthony, the new downside levels are 359 and 337. We're bottoming on our 92 level, damn near to the tick. But this goes back to what I say on FOMC days. This is hard to trust. We do not like trusting these one-directional moves leading into the FOMC. So this is getting a little sketchy at this point. Let's take another look at the probabilities. They have not moved. I think it went up by like 2%. So still looking pretty bad for the rate meeting. We don't have a definitive decision yet. Why do I trade futures over stocks? Futures are just the cleanest way to do what I'm doing. It's the cleanest version of trading of day trading, of like how I am day trading. It's the cleanest version. I don't have to worry about all the options bullshit like the Greeks and whatnot. I don't have to worry about the single name stock news like the earnings and all the headlines and whatnot. I do have to worry about them a little bit on the equities, but not as much. It's just clean. It's just clean price action trading. Not a lot of extra bullshit. I think stocks are best used for your quarterly and like your longer term trading. You take the profits, if you have profits, obviously, from your prop firm or your futures trading, and you funnel it into your quarterly or longer term accounts. You don't need to build futures accounts. It's pointless. It's literally pointless. There's no such thing as building a futures account. It does nothing for you. You withdraw that money and you build your stock accounts, your long-term accounts. Good morning, Mauser. Dylan, you said curious to know what your risk model is. It's really dependent on what the trade is. It's individual to the trade. I don't have a set risk of like I always risk 5 points, I always risk 10 points, whatever it is, right? It's just that setup. Where is my optimal stop loss supposed to be? Okay, it's supposed to be here. Okay, that means I have to enter here, so then my stop is 7 points away. Then my stop is 10 points away, whatever it is, right? Whatever that number is. So it's completely dependent on whatever the setup calls for. Like for example, if I was I'm not literally trading this, but let's just say I was. If I was taking this as a sweep and I was using my standard sweep setup, then my stop loss has to be below this low. Now maybe I would go find some other levels to see if there was more protection and I could put my stop like further away, whatever. But I know that if I'm taking this sweep, my stop has to be below that low. If I can't put it below that low, then that trade is not good. No, I'm going to take a look at the single stock futures probably later in the week, maybe next week. We'll see how the volume is. SanDisk down 58%. Yeah, you mean from the high? Yeah, the bubble is not looking too good. We can't confirm the bubble is over until we see all these earnings come out. If all the earnings continue to push it down, then yes, we can say it's over. Now, yes, obviously, if you're trading the bubble, you would have had to say this is over a lot earlier because your trade is terrible now. I'm not talking about in a trading sense. I'm just talking about like in a bigger picture. You can confirm the bubble is dead when those earnings are bad. But yes, the first sign of failure was the rollover top. We already talked about that back when it happened. The distribution losing the trail, we already talked about that as well. And now our trails are red, so now we're looking pretty bad. This needs to happen, though. Like, this bubble has to come down. This physical supply chain bubble, if I had to guess, is mostly manufactured. Like, it's not as bad as everyone's saying it is. I think they're doing it to pump up their profits, if I had to guess. It's definitely bad. I don't think it's as bad as everyone thinks it is. Massive bearish delta is skewing block trades, I mean. They're skewing the delta here. It also looks like there might have been a wall there. Was there a wall? There was a small wall there as well. It looks like around like 405. But yeah, delta's being skewed, but it is breaking the trail for the first time the entire day, actually. So now we are in a waterfall. So once it breaks the 1 minute trail, we target the 5 minute trail, and then so on and so forth. See if it can go higher and higher and higher. So it starts as a sweep, 1 minute trail. If it breaks, 5 minute trail, so on and so forth. So far, struggling the 1 minute trail. Yeah, Dylan, for the most part, I would say contract sizing is static. But if the volatility is way too high and you cannot put your stops where they need to be and still maintain the same notional risk that you typically want to take, you have to cut your size in half or by a third or whatever so you can expand your levels. So your notional risk, your notional profit is still the same, but your levels are where they need to be. So sometimes you have to cut your size to expand your bracket. NVIDIA is the key prospect behind it. Well, NVIDIA started like the data center craze. And then the data centers blew up and the supply chain blew up, and then here we are. That's why the biggest generational wealth trades over the last couple of years were people that caught on to that supply chain very, very quickly. When I say all my free videos and screen time is enough to get an advanced level of trading, yeah, I'd say so. I have, like I said, I've got 10 years worth of content on this channel already. And just in the last like 2 to 3 years, I've pumped out content on the more advanced stuff, the volume profile stuff, the order flow stuff. My channel has slowly grown from, I started out teaching a lot of the basic stuff. To be honest, the basic stuff is just boring to teach nowadays. I've just been doing it for too long. So I don't teach the basic stuff that much anymore. And as the years have gone on, my channel has just gotten more and more advanced, a little bit deeper. And I don't go back to the basic stuff as much. So just in the last like 2 or 3 years, there's enough content on there. This delta is just nuking here. There are layers of big delta levels and block trades coming in. They failed the 1 minute trail, so no waterfall here. It's actually our first orange pivot of the day, topping us out above that trail. Watch out for a higher low here. They might turn this into a trap. Yeah, Brain, it's just whatever works for you, right? People have different styles. My style resonates with a lot of people. It doesn't resonate with a lot of people, right? Some people don't like what I talk about. Some people are like, oh, well, that makes a lot of sense, right? So it's just really up to you. There is a little bit of a higher low here. If they put in a higher high above the EMAs, they're going to look for VWAP, most likely. It's almost like a rollover bottom, but it just doesn't have that same, like, sweep and the same, like, how do I say it? It's just not as obvious. It's not as obvious as like a rollover top. It's a bit farther apart than it should be. But you are definitely gaining momentum here. The buyers are getting stronger. You're starting to look really bad on the NASDAQ daily. You're like one time framing on the NASDAQ daily, meaning you're breaking the low every single day and you're protecting the high every single day. You're kind of doing it on ES, but a lot choppier. This is very, very strong on the downside. Yeah, you could target the weekly open. Like I said, it's hard to trust this move because of the FOMC, but it's hard to do anything because of the FOMC. So nothing is like very high strike rate right now. You're kind of guessing on everything today. I mean, the market is quite literally guessing on the FOMC. We don't even know what the FOMC is doing. Which, by the way, if you guys are new here, I will be streaming at 2 p.m. I always stream the FOMC and the press conference. Yeah, Daniel, it's just not looking too good on a lot of the bubble companies, the tech companies. Okay, like I said, if they can hold a higher high above this trail and the EMAs, they're going to look for VWAPs here. So that sweep is still in effect here. Momentum is shifting to the buy side. Yeah, you can say it's 90, or I think the other level was like 50 or whatever it was. Single print's going back to 19, which is basically VWAP. Good morning, Lucio. Yeah, Modern. That's why I always say I sound like a broken record because if you guys have been watching me for years, you've quite literally probably heard everything I'm going to say before. Like everything that comes out of my mouth, you've already heard probably a dozen times. I'm probably one of the easiest streamers to turn into an AI, right? I could just feed an AI all of my catchphrases, and then there you go. I'm replaced. Hey, Black, have a good day, man. They're failing to keep this higher high above that EMA structure or the trail, so looking pretty weak. We'll see if they can stay above that, basically the node right here, above 10. Liquidity's getting better, probably because you're around the POC. Okay, they are holding the bottom of this node here, so still rotating the node. So basically treat this as like a value area, right? We have a value low around like 402, 404, and then value high around like 410. Yeah, it's a little bit of an overlap, but it's mostly a sweep. The overlaps are more like tweezers when they're almost identical. Okay, here's the bottom of that node. So like I said, we're just treating this like its own value area. So back to 402 to like 410. It's like a 10-point rotation. If they find a lot of sell pressure down here, it's the same as like finding sell pressure on a value low, and it's trying to find lower value, right? But so far, it's getting exhausted. Same thing you would see on a value area. Yeah, well, this is exactly what I talk about pretty much every day with the D-shaped nodes just rotating back and forth. Pretty much anytime you have a doji candle, you have a node like this. We are starting to get a bit bearish bias. They're staying below the bottom portion of that node a little bit. They should be rotating back up, but it's kind of struggling to do so. Yeah, well, that's basically exactly what a P shape in lowercase b is. You have it's like a flag basically. Like think about a bull flag or a bear flag. In a bull flag, you impulse and then you chop. Bear flag, impulse, chop, right? But the bear flag would be more of a lowercase b. The P shape would be more of or sorry, the bull flag would be a capital P. But all right, guys, I'm going to take this chop to just call it a stream here. We will be back in a couple of hours. I will be streaming at 2 p.m. for the FOMC. As always, we will be streaming the press conference until it's over. We'll see if he says anything about continuing these press conferences, because this is actually not how they used to do it. They used to only have press conferences like, twice a year, I think it was, or once every quarter, or something like that. And he had some comments about whether or not he wanted to continue doing these the same way. So we'll see how that goes. But yeah, last we checked with the probabilities, it's like a 60-40 right now, which is very bad. It is almost always like 80, 90, 95, 99% for one thing going into the FOMC, a rate cut, a rate hike, no change, right? Right now it's 60-40, 60% for no change, 40% for a possible rate hike, not a rate cut. Which is interesting because a lot of people thought Warsh was going to get in here and start cutting rates, right? So the market is very undecided. So be very careful going into the FOMC. And then we'll talk about what happens afterwards, obviously, on the 2 p.m. live stream. But yeah, another reminder, guys, it is the last week of the month, so be sure to send me your receipts if you use code BREW anytime during July. That includes the last few days of July as well. If you guys use the code for the 90% off or any of the legacy accounts, they have that deal going on for the rest of the month. So if you use that, just be sure anything that you buy that's new, just send them over before Saturday. I believe Saturday is the first day of the month. So I will be pulling the raffle winners on most likely Saturday or Sunday for Discord access and tutoring prizes as well. But yeah, that's all I got, guys. If you guys are in Discord, I'll see you there. If you guys are not in Discord, I will see you guys in a couple of hours. We will be back on YouTube probably about 5 to 10 minutes before the FOMC, so like 1:50 p.m. Right now it's 11:27. If you guys want to do the math on your time zone. So a couple of hours. I'll be back. But all right, guys. I will see you guys in a few hours. Peace, everybody.